This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. Welcome back. And especially welcome anyone new, because today's video is especially for you. If you're trying to learn how to trade in multiple time frames, I'm going to give you the exact reason why I do this, why it's so important to use two different time frames and sometimes three. In today's example, I'm just going to stick with two, but I'm going to show you the importance of it in a real-time example that's taking place right now. Let's go ahead and get into this. First, if you want to learn more about these techniques that I'm going to show, I would suggest starting with the book. I'm offering it at a discount right now. You can go to rabilstockresearch.com/book for more information. Okay, I've got stock DHR up, and again, just to make sure everyone's on the same page, you got a monthly in the bottom left, got a weekly in the bottom right, daily upper right, and hourly in the upper left. All right. Now I have the exact same indicators on all four charts. All right. I don't change based on the time frame. This gives me a complete uniform approach. And then what you have to do, especially when you get into the micro time frames, is understand that probably your top profit taking approach, some of those things are going to be a little bit different. And if you're a trend trader versus a swing trader trying to get in and out quickly, short-term trades, you have to adjust your exit strategy. But in terms of entry, I can show you that on a 5 minute, the same 5 minute and a 1 minute are the same as a monthly and a weekly. All right, so that's the starting point. First of all, you pretty much could look at any stock market, or really, I used to laugh with my guys I teach one-on-one and say, look, if you gave me pumpkin seeds, prices of pumpkin seeds, and give me the open, high, low close of them, and I could look at two charts side by side, I can make money trading pumpkin seeds. All right. It doesn't really matter as long as there's enough movement in the price action and there's enough volume to make the indicators it's important, especially for ADX, to have enough volume. So you got to be careful. If a stock doesn't trade that much, this indicator might not have as much value. All right, let's look at this. So we've got this DHR. Now this is what stock I was highlighting. Why was I highlighting? Let's start with that. To my subscribers, I should say. So we got this nice move to the upside. Look at the momentum confirmation on both the MACD and the ADX. And we start our little pullback here. Now, I do want to point something out. And I'll probably do a special video on this. This is pretty important. When I see this pattern developing, the zero line reversal potential developing on the monthly chart, especially when there's low ADX, meaning we got a really strong move to the upside and we go through a long corrective process that takes 2 years to move the MACD from overbought, extended above the zero line, back towards the zero line. So from that point, once we get to that level, a lot of times what you're going to find on this time frame is a low ADX condition. All right, because we've worked our way down and it's kind of walking along the zero line. And when that's taking place, we get this low ADX pattern to develop. Now we get this move. So now this move is suggesting that maybe this move is getting ready to turn at the zero line and turn to the upside. You see what I mean? So it's nice to use these two together. Now we go back to where we're looking at this. We're starting to look for a pullback. We go to the daily chart for our entry. This is what I'm talking about. Like if we want to look for an entry just using the weekly chart, we might either wait for it to pull back to the breakout level and have an order waiting there and just have a limit order and say, if I get that price, I'll buy it. Or you might use trend support, which would be the moving average, and put the buy order right at the moving average. Or you could wait for the weekly chart. Let's zero in on this, to take out a prior bar's high. That's how I used to trade, is just use a single time frame and wait for this to turn to the upside. Now that dates back 25 years. I haven't really traded that way in a very, very long time, but it is an approach that can be used, and you do okay. But here's the problem with that. So I'm buying here above 250 and my stop's got to go way down here, 238, probably want to give it a little room. Yeah, say call it 238. So I'm giving it a lot of room in this situation if I'm going to trade that way. Now, by using the lower time frame daily, what this will do for me is not only improve that that stop size, the size of my stop, but it also might keep me from actually getting in. So instead of waiting for this to break out above this high or just buying at the low here, which I don't really recommend. I know there are guys that do that. They put a buy order here and then they put a stop way down far away or something like that. I've got fundamental guys that institutional investors that might do some of that because they know the company really well. And, they're looking at it from a very long-term standpoint. But I would not recommend that if I'm a trader. That's not what I would recommend. What we want to do is watch this consolidate and correct. And we actually want to get this 18 to cross down below the 40 and get an opposing trend. All of this is covered in my book as well as my courses. We want to get this actually going down and showing that this time frame has worked off the overbought condition. Once that takes place, now we're looking for a reemergence to the upside on this time frame. And then once we get in, we can use the risk on this time frame instead of using the risk on this time frame. You see what I mean? I don't have to necessarily use the low of the pullback if I'm on a daily chart. By the way, if you are enjoying the content, hit that like button and also subscribe. It will help with me growing this channel. Now, in this case, look at what's taken place. We know we've got this correction coming down. We've come down pretty hard, actually, especially over the last few days. And now the MACD has overrun the zero line. So once I see that, I've got a number of different trigger methods. I know that I'm not taking just a simple trend line break on the way back up. There's something, there's a little bit too strong. The selling's a little too strong in the near term for me to want to just go ahead and buy as it turns back to the upside. I'm going to look for something a little bit more complex. I want it to break the trend line and then make a higher low. All right. And then in that process, hopefully the MACD is sort of turning the corner. Now, the only reason why I'm still willing to look at this is because there's no strength in the sellers here. See the strength of the buyers that's based on the green, the plus DI is causing this blue line, this ADX line to go up. Well, on the way down, as we've corrected and gone down and turned the trend to the downside, the red line hasn't even gotten above 25 to any significant degree, and the blue line is staying very low. That's showing us that the strength of the sellers is not very good. So we've got strength on the way up, but not strength on the way down. And so that's telling me that we want to have an upward bias. That's the only reason why I'm looking at it. But then I'm going to go to MACD in this instance and say, you know what? I don't need to be in a big hurry. I think I can give this some time. It needs to turn around. Now, it's very possible in this situation, this will just keep dropping. Now, in the process of doing that and seeing this overrun, look at what happened. The MACD on the weekly chart has now overrun its signal line. So that changes everything for me now. Now, the rules I use for this is that once that happens, we could get a retracement up and maybe like a 50% retracement back up, but we're likely going to come back down on this time frame. So I don't need to be in a big hurry in the stock. I don't even need to be looking at the daily chart yet. I don't want to get a false move that gets me excited when I know that the odds are we're going to come back down, make a double bottom of some kind, and then work our way back up through this prior high. That's what I'm looking for. But again, I'm watching this stock because the momentum signs are good. The bigger picture pattern is interesting, and I'm noticing it from a group standpoint. The group that there's about 4, 5, 6 stocks that I've been writing down. They all are showing similar qualities, but the pullback that they've had has been a little too hard. And by using multiple time frames, I might have had this as a setup, right? It was set up, but it never triggered. All right. And if we don't see the trigger takes place on the lower time frame, it never triggered, so I never got in. So all it cost me was a little bit of time of watching it. And in most cases, I actually put an alarm up, and I would have probably put an alarm as a trend line break. And if it breaks the trend line, then it'll give me an alarm. It never did that. So it's not like I'm spending any time on it. I'm watching it because of the qualities it has, but I'm not getting triggered in. That is the benefit of using multiple time frames. If you use multiple time frames and you truly understand at least what I'm trying to teach, you will look at a lot of stocks that look like they have the potential to turn up or like have a strong move to the upside, but you'll never get in. If you learn this one thing, I think it can save you a lot of money. And I think it'll really help you understand how to read price action and understand when is a good time to be entering and how to lower the risk when you're doing it. All right. Let me know if you have any questions. Thanks.